Good morning, it's Harvey Jackson. Just going to get through some topics here. Clownshow Carney is playing dodgeball with our economy, especially when it comes to Greenland, and discussions around that. Trump is wanting to secure that for security reasons, and I think part of it is because he can't talk to the clown show that we have for Prime Minister in Canada. And look what he's doing with Venezuela. He's securing the black heavy crude as well. That Canada is the primary supplier of that product. Canadian dollar extends losing streak. Well, again, Clownshow Carney not stepping up to the plate and getting stuff done. Here's a pretty good take on it, maybe just, and it kind of ties them both together here.
What sectors of the Canadian economy are most likely to feel the impact first?
Well, you look at the stock market today. I mean, energy producers, oil field services, people are hitting the sell button first and asking questions later. Transportation, manufacturing follows fuel costs shift. Public finances and trade are next. Energy exports were $208 billion in 2024. And if you hadn't had these kinds of trade, the trade deficit would have ballooned by over $1 trillion the last decade. There's 400,000 jobs tied to the sector. And so that's how critical it is to the entire economy. You have a situation where tariffs are coming in, impacting primarily Ontario. You have real estate market that's rolling over in Ontario. You have land claim issues that are preventing capital from going into British Columbia. And now you have this impacting Alberta producers. It couldn't have come at a worse time. And so it's going to impact the entire country. And hopefully that's enough of a wake-up call to put forward and get this memorandum of understanding put into action and getting a pipeline built so we can get that oil to other markets besides Dunroe and Donald Trump.
I think you kind of summed it up there. But, I'm not an economist, but India forecasts 25-26 economic growth at 7.4%. And that's good news for one of the largest economies on the planet. They are still growing their economy. It looks like private consumption is still pretty good, which makes up 60% of the GDP and expanding. And the other side of this is also farm output, which employs 40% of the workforce, has been picking up at 3.1%. So, maybe we should look across and see what else is going on somewhere else as well to maybe get a bit of an idea of what's going on. Just a quick wrap up of commodities year of the metals, of course. Energy market, we know that keeps on falling apart a little wee bit with the large supplies. Precious metals, I've highlighted that a couple different times with gold, silver, platinum, you name it, rare earths. And it's not just the trade, it's the supply is starting to tighten up, especially when it comes to silver. Silver's a dual purpose product that never gets recovered, especially in solar panels and the electronics, because of the price. It doesn't get recovered the same as some of the other metals. Industrial metals, copper is on its way up, and of course agriculture is the laggard on all the commodities. So hopefully we can get dragged up with the rest. Quick look at the weather. Very absent the prairies, but man, oh man, the Ontario guys over there are getting rain, freezing rain. Just miserable over there. The other noteworthy thing to talk about when we look at the full 14-day forecast, it's starting to dry out. So that could actually give us a little bit of lift on the canola if soybeans start to get lift because of the Brazil Argentina dryness that's going on here. Markets and oilseeds, just have a quick look here. The canola is up 450 as we speak. It had a pretty good leg yesterday, and retraced some of those from midday trading to still had gains, but it wasn't as substantial. So canola 450, rapeseed only up 50 cents. Soybean oil half a penny up, almost at 49.86. But when you look at the chart, it really doesn't show you a whole lot of gains when you look at it as a whole. Crude oil down another 28 cents a barrel at 56.66, and the diesel fuel market just over $2 right now. I had a drop there yesterday and trying to hold on to not have any more losses. Soybean 10.64, up 8 cents. Spring wheat up a penny and your other wheat's up 3 to 4 cents. Corn is up a penny and a half, and the Canadian dollar is down again. So just have a look at it. Looks like we are going to try to get into this range. We'll have to see if it continues. We're getting dragged along, I believe, from soybeans and soybean oil complex and European rapeseed as well. So when you look at the new crop, it doesn't have the same pull up that you had on the front month March. And when you look at the European rapeseed, we had pretty good long candles, a lot more substantial than what we saw in the canola for sure. And if we look at what's going on here, the price differential has finally gotten above that 145. And the only reason I put 145 is because of the consolidation that we've seen there. And we did get higher into the close to the 170, but now we're trading at $153 dollar differential between the European rapeseed and Canadian canola priced in Canadian dollars. This is just the activity of boats moving around the Great Lakes. And I did zoom in and looked at Thunder Bay, and there's no boat sitting there at all. So they mustn't be taking anything from the Canadian side. Looks like it's all coming from the U.S. side, moving through the Great Lakes at this moment. Soybean oil, you can say that's maybe caught a bid, but that looks almost identical to the canola front month as well. So soybean futures, not quite the same kind of move, but you can see this pivot point did actually give us a little bit of a lift. And when you look at the November contract, same idea, but not near the drop that was shown on the current crop year. Light crude, you can see that this is basically just in this channel and continue to push down in this channel. Currently trading right at that 55.76 when I took that snapshot. And this is your New York diesel futures, and it's broken below that 210-ish kind of number price per gallon. Quick look at the Canadian dollar. It's a lot of red candles, really nothing that seems to be holding this up at all. The news that there could be, I forget how many boats. I did read the article and I didn't find it this morning, but Trump is basically commandeering all the boats that are loaded that were not going through the blockade that he had enforced in the Venezuela waters, and those boats are to come to the Gulf, where a lot of the black heavy crude that Canada produces goes there as well. U.S. dollar futures. A little bit of an increase there. And look at gold. Looks like we're going to try to make another higher high here if we give it another couple of days here. Copper just taken off as well. Silver made new highs again, tried to make new highs yesterday, but didn't quite make it. Let's have a quick look at wheat here. Really nothing to talk about when you look at that. It just keeps going sideways. If this continues, you could actually do some sort of strangle contract, sell a call above and sell a put below, and hopefully get paid for waiting for this market to actually break out. And with selling those calls above the market, you actually you could be getting paid for your time to wait. Chicago, it just looks like it's trying to come off the bottom there. Same thing with the French wheat. And corn has been basically just trading sideways. And this is the May contract. Darren Fesser from Alpha Trade has talked about putting in a strangle on this as well, or straddle, and trading this range trade that we see there. You can see the live cattle is actually trying to take off here. Same thing with the feeder cattle. And if we can break above this 61.8 retracement value, we've got room for it to get back into possibly $90 for lean hog futures. Next Monday is the WASDE report. There's actually a labor report that's going to come out on Friday as well.